Starting with Bitcoin, we've been tracking a midterm inverse head and shoulders pattern. Now we're seeing a classic throwback to the neckline, a move that's both technical and expected. In fact, a dip into the $107,000 to $103,000 range wouldn't invalidate the setup. Look closer, and you'll notice the confluence of the 50-day moving average meeting that neckline textbook. But here's the real question. Will this support hold? Or are we headed for a fake-out before the next leg up? You'll want to see the chart comparison to the 2021 cycle, because history may be repeating. Now let's talk Ethereum. ETH is doing exactly what we forecasted. It hit strong resistance and is pulling back right into a rising wedge apex. We're seeing early signs of a possible inverse head and shoulders. Is ETH gearing up for a breakout? Or is this just the start of deeper consolidation? There's more. We're also tracking ETH's risk model. It sat at 56 last check. With prices pulling back, we'll likely see that score recalibrate. How far can ETH fall? Anywhere between $2,900, 50-day MA, and $3,100 would still be a healthy correction. That's the zone to watch. But what if this isn't just technical? The manipulation nobody's talking about. Exchanges like Binance and Coinbase are flushing the perp markets, triggering mass liquidations while scooping up profits. They're exploiting retail leverage. It's coordinated. And guess what? It's still legal for now. Until market structure laws are passed in the US, manipulation is fair game. Exchanges host the trades and trade against you. We're seeing this dance with the headlines too. Tariff fears, Fed noise. It's all being weaponized to fuel volatility. Are market makers watching your TA? Content creators? Sentiment feeds? Absolutely. They use the same technicals to hunt stops and trap liquidity. That's why targets get hit so precisely, again and again. Let's talk Cardano, ADA. We shared a clip from July 22nd, calling for a breakdown from the descending triangle, and it's playing out right on cue. ADA's at 75 cents and likely heading toward the 50-day MA around 67 cents. Maybe even the 62-cent zone, which aligns with the macro support, the 200 EMA on the weekly. This is the bull market door. Losing it would be significant. But here's the twist. This move may just be the setup. If ADA finds support here, especially between 60 and 67 cents, we could see the foundation for a much bigger move forming. But if it breaks down below that, buckle up. Either way, this range is the battlefield. Altcoin market overview. The total crypto market cap, excluding BTC, is coiling. Higher highs, higher lows. The structure is intact, despite the short-term fear. Volatility is a feature, not a flaw. But to see where we're heading, we must understand what's happening behind the curtain. Macro clarity, inflation and policy shift. Triflation shows real-time inflation has dropped to 1.67%, below the Fed's target. We're approaching the part of the cycle where disinflation gives way to policy pivots. That means rate cuts are coming. Liquidity will return. Bull runs will follow. And with pro-crypto regulation gaining traction, the stage is being set. Smart money knows this. So, do exchanges. That's why they're shaking out weak hands now. So, is this dip the end? Or just the beginning of a massive setup? Stick around. We'll be tracking it all. Final thoughts. Markets are volatile. Red candles can be scary. But zoom out. This structure is healthy. Consolidation is part of the climb. If you've been here long enough, you know, volatility is the game. If you're a long-term investor, consider how you're navigating this cycle. We've got risk models, exit strategies, and on-chain tools to help guide decisions. No emotions, just data.